So market structure is how you identify the trend and trade the trend. So we have looked at the uptrend, we have looked at downtrend. Now market structure is how you identify the okay. Market structure is how you identify the trend and then trade the trend. All right. So let's pick a point. When you identify a trend, you can pick a point. Just pick a point and start from somewhere. All right. So let's start from this point. Let's start from this point. So what we do is this. We just start from here. Hold on. Let's delete this. Okay. So we'll start from here. We just start from here. And then the goal is for us to identify what is the trend and how do we trade it. The goal is to identify what the trend is and how we should trade it. All right, so we'll start from here. We'll go like that. Let's zoom in a bit. Okay, so we see that price moves from here, from the bottom here to this point, and then pulled back. We discussed that yesterday. Okay, then you keep going. To this point, then pulled back here, went up to market structure analysis. Now, this is called market trends. Trade in trend. We said trading with the trend. Trade with the trend because the trend is your friend, right? So when you are trading, your goal is to trade with the trend because the trend is your friend, all right? So that's what we're doing now. We are trying to identify. After I draw these lines now, I will then show you where the higher highs and higher lows are that we're talking about during the trend. When we're talking about trends, we talked about higher highs and higher lows. Okay, so it's not just theoretical. All right. So here now, what do we see? We see a low here. This is a low point. This is a low. And then we see this point here. This point here. This point here is a lower low. Is a higher low, sorry. This point is a higher low. This is a low, this is a higher low. Okay. This low is another higher low. This is another higher low. Okay. So this is how we identify these points. When you've drawn them out like this, you will begin to see when you use a line and you draw out the movement of price, you will begin to see all these setups I'm seeing. You will begin to see the higher highs, the higher lows. Now this is a high. Up here is a high. Up here is a high. On top here, that's a high. So now, on top here is a higher high. On top here is another higher high. On top here is another higher high. On top here is another higher high. So this is how you identify. Now, when you look at this, now when we are doing it, when we're drawing the lines, it was straightforward. But of course, in the real market, it's not as straightforward. But it doesn't matter. We can see that this is a low, and this low is higher. This low is higher than this. This one is higher than this. Even though they are not in a straight line, we can see how they are. We can see the high. We can see how one is higher than the other. How this is higher than this. How this is higher than this. Now this is a high, right? Now we can see that this high is higher than this high. 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 So that tells us, all of that tells us that we are in an uptrend. As long as a higher high as long as we are not seeing lower highs, as long as we are not seeing lower lows, we are in an uptrend. So this identifies now, this what we are seeing here now, what we are seeing here now is more like what we saw before. Sorry. What we are seeing here now is more like what we saw here. More like what we saw here. So we are in an uptrend right now. We are in an uptrend. This is an uptrend. This is the definition of an uptrend. Now this here, right here, is what we are seeing in the market right now. This is an uptrend. And the uptrend continues. It continues all the way. If we keep marking it up, we will see that the uptrend continues. Higher high, higher low, higher high, higher low, higher high, higher low. Now let's do this. We go up here again. What do we see? Price moves up, it pulls back. Pull back, it moves up again, it pulls back. All right? It moves up again, it pulls back. It moves up. It pulls back. It moves up. Oh, sorry. It moves up again. It pulls back. It moves up. All right? So this is how you identify an uptrend. And you can see all these points. You can see all these points we have here. You can see all of them. Higher highs and higher lows. 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 All right? Like I said, it's not as straightforward as when we did it theoretically, but that's exactly what we are seeing in the market right now. That's exactly what we are seeing in the market right now. Okay? So that's it. So it continues like that until the end of the uptrend. Until the end of the uptrend, until the uptrend completes. Until the uptrend is completed, this is what we are going to be seeing. Higher high, higher low. All right, now that is for an uptrend. Now look at a downtrend. How do you identify a downtrend? How do you identify a downtrend? Let's try and identify a downtrend here right now. Okay, so what we said a downtrend is a series of lower highs and lower lows. Lower high, lower low, lower high, lower low, lower high, lower low. That's what we see there right now. So let's see if we identify a downtrend now. Like I said, you can use your eyes. With your eyes, you can just see what is a higher high, or you can see an uptrend or a downtrend with your eyes. But then, how do you now trade it? Trading it is where you need market structure. All right, market structure now helps you identify it properly. It helps you mark out the movement of price. It helps you show, okay, it helps you show how price is moving and the structures that are forming as price is moving. All right. So when you are able to mark out how price is moving and the structures that are forming as price is moving, that's when you can take advantage of the move. That's when you can place trades with it and make money from it. All right. So you're not just meant to look at it alone. You are meant to actually trade it and make money from it. All right. So now let's look at this. Okay, so we see that price moved from this top to this point, right? Then it pulled back. Then it moved down again. Then it pulled back. Then it came down. Sorry. Then it came down. Then it pulled back. Then it came down again all the way here, and then it pulled back. Pulled back, then it came all the way down, and then it pulled back. Just that, like that, it pulled back. All right, so now what do we see here? First of all, we see a high here, a high. Okay, so, all right. Okay, so now what are we seeing here? We said that a downtrend is lower highs and lower low, lower high, lower low, lower high, lower low, right? So what are we seeing here? This is a high. This right here is a high. And this is a lower high. This is a low. This is a lower low. This is a lower high. This is a lower low. This is a lower high. This is a lower low. This is a lower high, a lower low. A lower high, a lower low. Okay? So this definitely now is a downtrend. That is a downtrend that has formed here. And this is what? An uptrend. This right here is an uptrend based on our definition. So what do we say? What did we say? We say in an uptrend, what you do, you buy. You don't sell in an uptrend. This uptrend you are seeing here, you could have been buying. Anywhere you buy on this uptrend, you'll be in money. Anywhere you buy on this uptrend, of course, you shouldn't just buy anywhere. But the truth is, if you had bought anywhere on this uptrend, you'll be in money. You'll make money from it. And this is a downtrend. And what happens in the downtrend? You sell in the downtrend. You don't buy in the downtrend. You buy in the downtrend, you'll be in trouble. Imagine you start buying from here and price starts falling. All your money will be gone and the market will still be going. All right? So that's the reason it said that the trend is your friend. So you buy in an uptrend, you buy in this uptrend, and then you sell in a downtrend. And then when you see a structure that is a consolidation, you don't trade it. You don't trade a consolidation. A consolidation is not a place to trade. So you avoid trading in a consolidation. All right? So that's how we do it. That's how we do it. Okay? So that's how we do market structure. So let's look for another pair now and then try to do some, let's see how we will trade. Now, if we come to a pair, how would we trade? How would we trade? Let's look for a pair we can use. We have an iffy internet here. Fishy internet, so internet is having issues. Come on. All right. All right, so what we, let's look for a trade and see how we would trade something now. Now, if we saw a trade, if we saw a setup, how would we trade it? So I'm trying to look for something we can use now. Okay, so let's look at this pair. This is AUD-NZD, AUD-NZD, and so we're looking to trade AUD-NZD, right? So, but what we'll do is we need to identify the trend, then using market structure, that's when we will know how we will trade. We need to identify the trend using market structure. That's when we'll know how we'll trade. Sorry, let me look for another pair, totally different pair. Let's say CAD CHF. CAD. Okay. So let's do AUDJPY. I've been marking up some of these pairs. I'm looking for a neutral one to use.
It's like the network is disturbing you so much.
Yes, yes, of course. The network is breaking and coming back. That's the issue. All right. So let's look at this. Now, some of those pairs I've already marked them up and all that. So I'm looking for a neutral one so we can look into. All right. So look at this right now.
Australian dollars versus JPY.
Yes, this is AUDJPY. This is Australian dollar versus Japanese yen. All right. So how do you trade this? Now, first of all, you want to identify the structure using market structure. So how do I now trade after identifying the trend? First, let's start from here. Okay. So we see that price moved from here to this point, right? Moved from here to this point and then pulled back, right? So came all the way down and then went up. So just stay with me. Let me mark this up. Then we'll talk about it.
You are not including the week.
Sorry?
You are supposed to include the week now.
I can't hear you.
The week.
No, I'm not. It doesn't matter. It doesn't matter. You can decide to use the week. You can decide to not use the week. It doesn't matter. Okay. So, of course, there are people who say when they are drawing support and resistance, they need to put it on the week. There are those who say they don't need the week. Who cares? Provided it makes you money, provided it's what makes you money. That's all. At the end of the day, it's about how much your system is making you. That's what determines how correct it is. Okay. All right. We're already here. Okay. All right. So based on what we discussed concerning trends, what happens is this. Whenever price moves from a point, whether it's from an up, whether it's from a bottom to a top, or from a top to a bottom, it gives us a structure, and pulls back, it gives us a structure. So what that means is this: whenever price moved from here to this point, pulled back, and then went to a low. This is a high point, and this is a low point. All right. So this price moved from this point right here. Price moved from this point right here. Then it came to this point right here, and then it pulled back. Once it pulled back, it came to another low point. came to a low point. So what happens is that around here, market price gives us a structure. We have a structure here. So that structure, we mark it up. We know that price is telling us that something is happening there. So that's what we do. So now what we do again, we watch for price. We see that price moves up again to this point, again here, again here. We don't really see any serious thing around here. And until this low is breached, a new structure is not formed. Until this low here is breached, a new structure is not formed. Okay? So now all of this doesn't give us a structure. Of course, there is a support here, but that is not the structure we are looking for. All right? So now you notice that price kept moving here, and then moved up here, and then moved to a low. Look at this now. This was now a low point. A low point. And then that's where we have, it's not even, I didn't mark that properly. Hold on. This should have given us a movement here. Okay. So once this moved down here, gave us a pullback and came down here, it gave a structure happen here. Why did a structure happen here? Look at this. You will notice that this is a lower low than this point. Look at this now. This is a lower point. This is a lower point than this. All right? This is a lower point than this. That's why a structure was formed for us here. This is a new structure that we have here. This is a new structure that we have here. Okay? So that's how come we have a structure there. And then once we have another low here, look at price moved here gradually. There was nothing here. And then price moved again to another low. Price moved again to this point. So what happened? We have another structure right here. We have another structure right here. All right? That's another structure right there. So price moved again, moved up here, and then we have yet another structure here. Right? Yet another structure here. Okay? So what we'll just do now is extrapolate these lines, these structural lines we have here. Just extrapolate them. All right? Let's extrapolate them and see. All right. So when you see what we've done now, then you will now notice that at these structures that have been created, that is where we have opportunities for trading next time. That's where we have, once a structure is formed, it gives us an opportunity for future trade. Once a structure is formed, guys, take note of this. Once a structure is formed, it gives us an opportunity for a future trade. All right. Now look at the structure was formed here. What happened here? You see that price came all the way to that point and then it reversed from there. So what would we have done? We have seen this structure. We put a sell here. What would we be making? Guys, we'll be making money. We will be making money. We will be making money. That's what we'll be making from here. If we enter the trade here. And why would we have entered the trade here? Because there was a structure there. Now look at this. Now come down here. This structure, this point now have not been breached. We'll leave that alone. This point now, look at this. We had a structure here, right? Did you notice that price came all the way to that same zone, to that same structure point? That's why I said, let's extrapolate the line so we can see. Now, when we extrapolated, you can see that price came to that same structure. And then what happened, guys? It dropped from there. If we had entered the trade there, what would you be doing? Making money. That's what we'll be doing, making money. what we'll be doing is making money. All right. So take note of this, guys. We don't have much time on this session anymore. But wherever price gives you a structure, wherever price gives you a structure, that is an opportunity for a future trade. Now look at this. Look at this point now. Did you notice that price came all the way to this same zone here, this point, which is a structure. And then he pulled back. Look at this. He pulled back from here. So now when you look at, when you understand this 48 pips, so when you understand this, you will know that it's not just, there are people who trade only off support and resistance. Only off support and resistance. So now if you trade off support and resistance, you will not, you'll be blindsided by price sometimes. Price will play you somehow. You will think that, okay, how do I know this is going to happen, that's going to happen? You may not know very much. But when you are following the structure of price, you'll be able to use structures that have been created to enter trades, to anticipate trades in the future, guys. So this is how we use structure to trade. So now this session is, we have just 5 minutes left. Zoom is telling us we have just 5 minutes left. So we can continue on this right now, and then time is actually very fast spent, all right? So we will end the class right now, okay? But tomorrow we are going to be back in the morning for a live session. Then for the $50 to 6,000 plan, we are going to be starting it around by Thursday or so. So I just want to give more time for everyone who wants to join the plan to create their account and fund it with $50, right? So that's why I'm giving time till about Thursday or thereabout for us to get started. So if you want to get started with the plan, you want to join the plan, all you just need to do is go to the group there or send me a message. I'll send you the link if you can't get it. So you can create your account, fund it for $50, and then we'll get started. So we're going to trade using market structure. And the way, like I said before, it's going to happen is that I'm going to be looking for the I'm going to be analyzing the market, looking for the trades, and I'm going to be giving the trades to those who are on that plan. Every other person, even if you're not on that plan, we are still going to be doing analysis for everybody in the money, all right? But then for those who are on that plan, there will be a specific trade that they will be taking because the trade is just for 20 pips only, all right? So we are going to be looking for a specific trade. I'll be sending out a specific trade for that purpose, for that purpose, and only for to those people who are on that particular plan. But every other person will still get trades, all right? Even if you are not on that plan right now, you will still get trades. We'll still mark up charts in a day and you'll still get trades. But for those on that plan, they will get a specific trade that are reset specially for that purpose, all right? So the goal is to take 1 trade a day, 1 or 2 trades a day, all right, and hit our target of 20 pips. And then once we can hit our targets of 20 pips every day for 30 trading days, we'll hopefully be able to reach that goal, or at least go towards that goal, or at least increase our money to some point, all right? So that's what it's all about. And I appreciate you guys. Sorry for the network issues that we've been having. I think we'll find a way to sort it out. Also, even the Zoom, we'll need to get a Zoom. I'm going to get a Zoom paid version soon. So when we have a Zoom paid version, we'll be able to have a class for as long as we want. All right. So all of that is what I'm working on. All right. So thank you for being with me tonight. We'll see again tomorrow when we get into the markets to see what we have, what the market is doing, and what opportunities we can take for tomorrow's trading, guys. All right. So if you have any question, we have to end this class. Now, if you have any question, drop it in the group. I think I'll find a way to answer it for you right there. All right. Have a good night, everybody.